Hey everyone, and welcome to the OctaFX land. My name is Ambrose Ebuka. Before I go into details about the live trading session and some offers, you can go ahead and let me know your name and where you're watching me from in the comments. So go ahead and type your name and where you're watching me from. So usually live trading sessions like this get to perform trades in real time. We also analyze pairs, and you can always type in the comments the pairs you would want me to analyze. So you can let me know in the comments the pairs that you would want me to analyze. Second. All right. Let's see who we have in the comments. Elizabeth says hi. She's watching from Lagos. Hello, Elizabeth. Adi says he's from Indonesia. It's amazing. Welcome. Blacking says he's from Imo State. Welcome. Thank you for joining, every one of you. So we're going to go straight into the offers or a bonus that you can get by using the promo code Ambrose E100. So if you apply this promo code, and one way to do that would be to scan the QR code you see on the screen, or you can follow the link in the description, or you can just manually type in this promo code when you want to make a deposit to your OctaFX trading account. So there's a section, while you're making your deposits, that you would see apply a promo code. Then you can type in Ambrose E100, and this promo code gives you a 100% bonus to your deposit. Promo code is valid until 31st May 2023, so you can take advantage of this and increase trading profitability. All right, guys, you can still let me know your names in the comments. And you can also go ahead to tell me if this is your first time, taking part in an OctaFX live trading session. Jeremiah says hi, he's watching from Port Harcourt. Oh, okay. Welcome, Jeremiah. So the first thing we're going to do actually would be to look at, economic events, the fundamentals, because I'm talking about, fundamental analysis. Paying attention to, what's going on economically, Forex market. And why is this important? It's important because this is a driver of the Forex market, right? Things that happen economically drives the market. Apart from sentiment and technical analysis, you should also pay attention to some important reports or comments from, central bank governors, or important economic events like the consumer price index, the GDP, PMI, the FOMC, and all this. These are like major economic events that bring about a good number of volatility or high volatility to the Forex market, and you want to pay attention to this, right? So we're going to look at some of these economic events. So if you've noticed, I've added high and medium impact just so that we can have a good number of economic events to look at. Or usually I like to stick to high impacts alone. We can always change this here if you use the OctaFX economic calendar. You can edit it yourself. And if you're watching from a different country other than West Africa, you can also change your time zone here. Okay, Elizabeth is saying this is her first time tuning in. She's so happy she didn't miss it this time around. Thank you. At the end of this live trading session, I believe that you would have improved your knowledge of the Forex market and have like an in-depth understanding of technical analysis and fundamental analysis as well. Welcome, Dan is watching from Johannesburg. It's your first time. Welcome. And the same goes to you, I believe you would have an improved knowledge of the Forex market as well. Okay, So let's look at the first one, which is the Australian retail sales reports. And if you don't know what this is, you can actually just click here, and OctaFX has provided like an information where you can understand what each report means, and what's the impact of this report would bring, or what this report, or the results of each of these reports would bring to the domestic currency of that report. So as you see here, JPY, this report is actually going to have a high impact on the yen pair, right, or the yen currency. So the retail sales report gives an aggregated assessment of retail goods and services sales during a specific time. Now, this is like the primary gauge of, or the primary measure of Australia's consumer spending, and this report accounts for approximately 80% of total retail turnover in the country, making it a significant indicator of inflation and GDP. Now, this consumer spending can be from restaurants, food-related industries. It can be from household goods. It can be from clothing, footwear, and so on. The retail sales, or the retail sales impacts the decision of the Reserve Bank of Australia, and also the value of the Australian dollar as well. So if you get a higher than expected figure, then it can be seen as bullish for the Australian dollar, and a lower than expected figure would be seen as bearish for the Australian dollar. But obviously, we'd have to look at the charts, look at the technical aspect of this Australian dollar across other pairs. It can be AUD USD, AUD JPY, and then we can look for opportunities to either buy or sell. You can look at the relative strength and weakness of the Australian dollar relative to other pairs that will be trading. Okay, so we've had quite a number of speeches today, and by now you'd understand that these people, the governors, and these board members, by now you'd understand that they speak highly on interest rates and monetary policy, and the comments that they make usually have a great impact on the future direction of the market. For example, we saw Bank of England's Governor Bailey sound hawkish earlier today, and now we can expect the pound to continue moving higher, not only because of his hawkish stance, but also the recent developments in Britain. We've seen the EU and UK seal a deal on Northern Ireland concerning relations improvements. We've also seen the UK Chancellor of the Exchequer, Jeremy Hunt, say that there's a lower chance of recession. So I believe that all these, are additional information that would bring about more gains to the pound in the coming days. But remember, you always have to align your fundamentals with technical analysis as well, by looking at the charts. Okay, what's the next one? US Housing Price Index. So the US Housing Price Index, which consists of value of housing market conditions, is a sensitive factor to the US economy, and this just gives you an estimated value of the housing market conditions in America. We've seen a higher than expected reading on this report, and as you can see here, the forecast was minus 0.6%, and we've seen a report of 0.2%, and usually a high reading is seen as bullish for the dollar. You can see here, generally speaking, a high reading is seen as positive or bullish for the dollar, while a low reading is seen as negative or bearish for the dollar. But this is actually a medium impact report, so we're also going to look at how the US dollar has reacted to this, and this one as well, the US consumer confidence, which basically tells us about consumption, and consumption consists of around 2/3 of the US economy, and the US consumer sentiment improved significantly in March, with this consumer confidence index edging higher to 1.04 or 104.2% from 103.4% that it was in February. You can't really see here, but I think we'll just check Forex Factory. As you can see, this is also an alternative website where you can get economic reports as well. But we've seen how the US dollar index has reacted initially to this report with a slight increase, but we'll head over the charts, for some analysis and identify the next possible move of these markets. Remember, guys, we still have economic events for the rest of the week. It's just Tuesday. We have AUD CPI coming tomorrow, And we also have some, medium impact economic events as well that you can pay attention to. Let's see for the rest of the week. Okay. Annualized GDP for US coming up this week. Harmonized index of consumer prices on Euro. We also have reports on unemployment rates in Italy. Mostly reports on JPY pairs, and also a lot of speeches that will be happening on Friday. So we can always, someone's asking me to zoom in my screen. Okay. So you can always pay attention to these economic events to confirm and identify, strength and weakness of the domestic currencies that are related to these events. So let's go over to the charts. Remember that upon analysis, or while I make my analysis, if you have some questions, you can always ask in the comments. And if you have, your pairs that you want me to analyze, you can also, type them down in the comments as well, and I'll check them out. All right, so we're going to start with the dollar index first. All right, before we actually start analyzing, also because we have some first timers here, we're actually going to go through the framework, and the framework basically gives us an idea of areas on our charts where we can look for momentum, buying momentum, selling momentum. You can use that to identify opportunities. You can use these levels to identify opportunities on our charts where we should buy or sell. And the framework is made up of market structure, entry triggers, swing lows, ATR, SL and TP, and risk management. So basically the market structure just tells you or gives you an idea of areas on your chart where price could make a retest, price could bounce from, areas on your chart where supply and demand seem to be high, and buying pressure and selling pressure could kick in, just like you have the key levels, support and resistance levels here and here. You can also use your trend line to identify a trend line like we have here to identify some levels as well. As you can see, as we're using the trend line, you're seeing that the market has made a good number of retests on this trend line. And what happened whenever the market got to this trend line, we saw a bounce, another bounce as well. I think I should just adjust this a little bit. Yeah, so you can always draw your trend line on the wicks, which are these shadows that you see here on the candlestick. So you can draw them on the body of the candlestick, whichever one is fine. You just have to stick to one of them. If you're drawing on the body, you have to use the body. If you're drawing on the wicks, you have to use the wicks as well. Or you can draw on both. Second one would be entry triggers, and the entry triggers basically tell you, or are the things that you want to look out for to execute a trade, right? So the entry triggers can be chart patterns. The entry triggers can be candlestick patterns. You can also use indicators like the moving average and RSI as well. But remember that it's not really ideal to use indicators in isolation. And what I mean by that is, if you want to trade with indicators, you obviously want to have confluences, right? You want to have like a good number of things happening at once to give you an idea of what's going to happen in the market. For example, if you see the market making like moving in an uptrend, then you want to identify support and resistance levels where the market could bounce off from. And if that bounce tallies with your moving average and also tends to create like a higher low, like it did here, higher high, higher low, higher high, another higher low, then that can be multiple confluences, right? That can be a confluence, like multiple things happening at once, and then you can use that as an indication to buy or sell, determine or depending on what market shows you. And then for your exits, and by exit I'm talking about how you can close the trade, because for every trade you open, you want to get your financial results, right? You want to actualize that result, so you have to determine your exit point of that trade. So you can use your swing lows, you can use the ATR indicator, you can use your stop loss orders and take profit orders, which are automatic orders that halts the trade. For the stop loss, it halts the trade from moving further against you. The take profit secures is your preferred amount of profit, even if you're offline, even if you can't have access to your app, or your phone is dead probably or something. These are automatic orders that would trigger at your preferred levels. And the last one is your risk management, which includes, or having a good risk management plan, which should include your lot size, using a conservative lot size, your risk to reward as well, using a moderate risk to reward. You don't want to risk higher for a lesser reward. That may not be rewarding in the long term. So these are the things that you should actually identify, and it's very ideal that you identify these things before you execute the trade, because they help they will help you as a trader deal with emotions and all that stuff that can give you some triggers when you're trading. So if you're able to identify market structure, understand what's happening in the markets, identify your entry triggers, and once you see these things, you identify where you want to execute that trade, and upon placing the trade, you apply risk management strategies, and then you're good to go. We're looking at the long-term results from trading. Okay, so you need to put all this together to actualize that long-term results, to be profitable in the long term. So I'm just going to keep this here so that you can always look at that, because we're going to be using it to do our analysis today. And yeah, to be easier for you to understand when I say something that has to do with trend lines or key levels and all that, to be easier for you to understand. So let's start with the dollar index. And dollar index, you can use this to trade across major pairs like pound dollar, euro dollar, and it's very ideal that you understand what's going on here. So if the dollar is weak, then obviously you're going to see how it affects the pound dollar, euro dollar, Aussie dollar, these major pairs. You're going to see that it's going to also show weakness on these pairs as well, especially if these pairs are doing, especially if these currencies or the base currencies like pound or euro, especially if they're doing great, then you're going to see that the market will tend to push up if the dollar is weak. And that is exactly what we're seeing right now in the dollar. In our last live trading session, we identified these 2 points as where market the dollar index could potentially make a test. In this case, it's going to be make a retest. We saw it happen here, and we are clearly looking at this breakout of this level that we identified, and this happened due to FOMC. If you're actively trading with the fundamentals or the economic calendar, which you should, you would remember that there was a huge spike at on that economic event, and we saw how the dollar index broke straight below this level that we just identified. Right now, on an overall scale, we're still trading below 104 cycle level and key level. We're trading below the 200 period moving average. We're trading also below this significant support level, which is also a minor key level on the dollar. I think I will just indicate that here. So everything is just heading downwards, right? The dollar is weak, and also we're seeing that Jerome Powell is, has made dovish statements in the past concerning interest rates. They're looking to pause, and we're seeing the dollar index react to that. We're seeing how the dollar index is just pushing further to the downside. We've had this key level mapped out for a while now. I actually expected it to get down to this point before this pushback, but it didn't do that. That's fine. The reason for having a key level is actually to pay attention to areas where the market could potentially get to. Also keeping in mind that you're paying attention to that level so that you can react when the market gets there. Okay, you're not placing your trade with much confidence, like you want to move this market to that point, it must move there. You want to actually see how the market reacts to your key levels, and then you execute the trade. You're reacting to the market. You're not, moving the market yourself or with your trade. So 101.5 is still in sight. It's a dollar is bearish. I'll begin to sell your currencies against the dollar. I'll be looking to buy these currencies like pound against dollar. So I'm looking to sell dollar across these major currencies because it's still showing signs of weakness at this point, and 101.5 is still in sight. So I'll actually be selling, for the rest of the week. I'll be selling dollar. Potentially, if it gets to this point, then I'll observe to see how it reacts here. If we break below, still bearish on dollar, but if I start to see some bullish signs, then obviously I would slow down on my sales and pay attention to see if the dollar has started to get some strength. But before then, we're going to have a lot of speeches and economic events that will determine, what happens there. So I'll be on the lookout. I'm just going to identify this level for you guys as well. Potential area where the dollar index can get to. Just going to put it here. I think I'd have to also turn this into a zone. So it covers the zone. Yeah. It's much better. Okay. So the first pair we'll be looking at would be the pound dollar. Pound dollar. Okay, so I believe that you can now see why it's important to have your levels mapped out. We had this minor key level as resistance, both of them last week. Saw how the pound dollar market used this level as a breakout and retest, right? A breakout and a retest. We had this level mapped from last week as well, I think last 2 weeks, where it served as a potential resistance, and if you notice before, it was support, and that's what happens with support and resistance. If price breaks through support, well, support is going to be below. So if price breaks through support, it becomes potential resistance, and you see price try to get back to that level before the pushback, and that's what we had here. So the breakout, so market respect this resistance level from here. You can see how many times it touched here, and you're seeing how it respected it here. We saw that retest at this previous resistance that has become support. If you notice, this was resistance here, it was resistance here as well. We had a breakout, but not a sustained one, because after the breakout, the market pushed back down. So you can identify this as a fake out. And we also had one here as well, right? So this has turned to potential supports for the pound dollar, and twice actually, and we've seen pound dollar move further upward. So generally, I'm bullish on the pound dollar. This key level is in sight for pound dollar, because obviously the market, we're seeing the market push further to make a retest at this point. We're seeing how strong this level is. We're seeing multiple times the market has tried to break above here, but it couldn't. So that's where it's headed. What you can look out for is if you're actually a swing trader, a long-term trader. How many pips? Let me just check how many pips this is. Take this off. This is about 35. Let's just call it 40 pips, right? If you're a long-term trader, I would say you patient enough for the market to get to this point, and if we successfully break above it, get a nice retest, that's going to create a higher low. So if you successfully get here and we're able to, break above it and you get that retest, then this is going to serve as a higher low for the pound dollar market, and you see the pound dollar market start to push up. Let me also indicate that as well. So you can see the amount of higher lows that has been created in this market. I'm just trying to, indicate that for you guys. And the reason why I'm kind of streamlining this patience for market to get here for long-term traders is because it's just 40 pips to get here, right? So if you hop on, stop loss is obviously going to be somewhere around here. That's not going to be a good risk to reward, right? So that's why I'm saying, you can be patient for the market to get here. If you get a nice breakout on retest, you can trade it to the upside. But the pound dollar is bullish at the moment, this area 1.23 scored at 1.24. I have a question. You can ask a question in the comments. There's a section where I answer all your questions, so it's important that you type in the comments, so that you don't forget. And so that I can see them. Okay, so this is the level that is in sight for the pound dollar. I'm just going to go to the lower time frame to see, just for day traders, how far to hop on this trade. And it's pretty obvious right now, right? How is it obvious? So let's just do like a top or a fresh analysis on the lower time frame. And you can always conduct analysis on all time frames rather, and all currency pairs. So you can always conduct analysis on all time frames. It's just very important that you do it on the higher time frame because there's a lot of noise in the lower time frames. But it doesn't mean that you can't find market structure on the lower time frames. And you see that I've already identified some key levels right now. Identified this trend line where you're seeing the bounce. This would have been a great place to hop on a buy trade, because this coincides with this key level. You can see the blue line. It also aligns with the trend line. That's 2. And it also shows a bounce on the 200 period moving average. That's 3. So you have a confluence, right? You have, factors, at least 3 factors that has given you the indication to hop on a buy trade on dollar. I'm just showing you this to you guys for educational purposes, so that on your own, when you're making your analysis, you can utilize this. And if you're using the most recent swing for your stop loss, like you have here, this is the most recent swing low, right? That's going to be at, let's see, where's it going to be? 1.2278, and that's just about 6 pips. And your profit is, going to be, if you're using most recent swing high for your profit, is going to be here. For your target, your first target is going to be here. That's about 45 pips. So you can see that this is a good and moderate risk to reward. You have 1 to 6, almost 7. 1 risk, 1% risk, 7% reward. And this just goes to show, that having a framework is important and it works for you as a trader as well. So going to the lower time frame for day traders that would love to identify buy opportunities on pound dollar, here's what we're going to look out for, right? Just going to bring this up a little bit. So we're seeing, let's make this a bit bigger. Okay, so we're seeing that the market has broken out of this resistance. I'm just going to take it to the back as well, because we also have one retest from here. So we're seeing that the market has broken out, has come back to find, or to find support here, and we're seeing the market push up. Now, what you want to look out for is a break above this previous high. If you get that nice break, remember this the lower time frames. If you get that nice break above here, you know, you see that probably this candlestick just breaks above and you see it close above, and you also see bullish signs on the next one. Here's what you can do. You can hop on the trade and your stop loss is going to be somewhere around here. Your target, you're taking your target at this area where we're expecting the pound dollar to get to. This is going to give you a 1 to 2.3 risk to reward. So this is one way that you can, this is what you want to look out for if you are actually trading the pound dollar market and you're a day trader and you want to capitalize on this opportunity. That's what you want to do. All right, let's look at euro dollar. So the euro dollar market has been quite interesting, and from our analysis or our live trading session last week, you know, still looked at this support trend line as valid because you can see how many times it bounced off, and it also came down here to bounce off, I think, price, right? Oh, yeah, this wasn't a bounce. This was actually a break that was pushed back in. So you can call this 1, 2, and you see that last week, that small week that bounced off as well. So that's 3 times. I think let me just indicate this as a support trend line. All right. So we've had a nice bounce on the euro dollar market, which has also broken above the significant resistance as well. Remember, we had this area where we wanted the market to push back down to, so you can grab some liquidity and trade it to the upside. Didn't really get there. I think it was about how many pips away? Let's see, about 20 pips, 25 pips away from, you know, the area where we were expecting to hop on a buy trade, and the market began to push to the upside. So what are we looking out for on the euro dollar markets? First, let me just connect this as well. So euro dollar market is bullish, you know, still heading upwards, but we can see that at this point, that bullish momentum has begun to slow down a little bit, and we're seeing the emergence of like a doji candlestick. We can't really conclude until it's done. That's why it's also important to understand how to read candlesticks, because you have to be patient enough for a candlestick to form completely so you can understand what it is, right? And you can understand how to read this candlestick if you watch the videos, the OctaFX videos on this channel as well. But yeah, we're seeing that the momentum, the bullish momentum has started to reduce. We're seeing all this emergence of bullish candlesticks here, a small bearish candlestick. The buyers took over again, and we're seeing that it's beginning to slow down. So from here, we can start to see a minor consolidation and a break out of that consolidation to the upside, or we're going to see the market start to push back down, you know, to align with this trend line and then react again before pushing to the upside. But my overall bias on euro dollar is bullish. These are the things that you can look out for on euro dollar markets. Just gonna delete that. At most, we can have another bounce of this resistance that has turned support. So here's what we can also have. We can also have a pullback and then another bounce from here to the upside, right? But we can obviously see that the euro dollar market is pushing upwards, and I believe it's going for another retest at this significant resistance trend line. I think I should indicate that one as well. All right, but like I said, still bullish on euro dollar. Obviously we're seeing reduced or slowed momentum, slowed bullish momentum. So we obviously want to see if the market is trying to pull back, make that retracement, and before it continues to push to the upside, or it wants to consolidate here for a while and then start to push to the upside. That's what we want to look out for on euro dollar. Next one we'll be looking at is Aussie dollar, the Australian dollar against the US dollar. All right, guys, from our live trading session last week, we looked at the possibility of the Aussie dollar market making a bounce at this trend line or breaking the trend line to head down to this point, right? And what did we see? We saw that nice bounce at this minor key level, as we've indicated here. Just going to delete that so we can see the charts properly. We saw that nice bounce to the upside. We had our targets here, if you guys can recall. And this is also why it's important to have key levels, right? Because if you notice, this was a minor key level. So how many times the market tried to test? We can also trace this back to previous times. We had targets here, and obviously the market has respected this minor key level as well, has also respected this 200 period moving average before the bounce downwards. All right, so this break to the downside didn't happen. What we saw was a bounce, and we capitalized on that. So I'm just going to take this off. So what's the current situation of the Aussie dollar market, and where is the potential direction of this market as well? So right now the Aussie dollar market is clearly not showing any direct indication of possible direction. We're seeing how it's reacting to all the noise happening here. We saw the breakouts to the downside. The market consolidated around this minor key level for a while, couldn't break below it to get down to this point, and now we're seeing the market push back to trade inside this bullish channel and above this support trend line, right? So what we can actually look out for on the Aussie dollar market is how it reacts to this level again and potentially this level as well. The reason for that is because if you want to go short on this trade, let's say you want to go short on Aussie dollar, these are the areas where I think I'm going to use this to use this one. So these are the areas where you want to look for these sell opportunities, because now if the market gets here or it gets above here to this minor key level as well, we're going to have a bounce at resistance. I think I'm just going to show you guys with this zone so it's a bit clearer. I think this is perfect. So if the Aussie dollar market rallies up to this level, what we want to look out for, and this is for shorting, if you want to sell this trade, if you want to sell this market, what we want to look out for is how it reacts to these key levels, this one and this one as well. And also that's going to be an alignment with the 200 period moving average as well. So if we get, the rejection and we see bear start to push in, then we can hop on that sell trade and sell Aussie dollar to the downside, potentially taking off targets here and here, and you can have, an extended target to this point as well. But if you're looking to go long on Aussie dollar, then you also want to pay attention to how the market reacts here. If you get a break, which is obviously going to be a strong one because we have a zone here, we have the moving average. So if you get a break test, then we can look for bullish momentum at that retest and trade Aussie dollar to the upside, right? And I believe if I extend this trend line, we would see that it's also possible for, what's happened here to repeat itself, and happen here as well. Just bounce off at this resistance trend line. Let me just use a clear to indicate that as well. So you can have something like this. Okay, so I'm basically neutral on Aussie dollar, but I have just indicated the things that you should, look out for if you want to trade these markets to the upside or the downside. But remember, the US dollar has shown some weakness, and you can capitalize on that. But you want to look out for these entry triggers and, take advantage of it. Next one we'll be looking at is the pound yen. I think I'll just check, after the pound yen, I'll check your comments to see if you guys have pairs that you want me to look at. All right, so from the live trading session last week, we considered the possibilities of the pound yen market, bouncing off at this zones 163 to 164, and we're seeing that nice bounce that happened here, push this to the downside. I'm just going to take this off and take this off as well, push the markets to the downside. Now we're seeing that the market has reacted to this minor key level from here. I'm going to indicate it as well. I've had that pushback into and above this support trend line. This significant support trend line, and we're seeing how the market is bouncing off at all these minor key levels, not clearly showing any strong momentum. But okay, rather we're seeing how the market is just bouncing off 161.6 levels and 161.2 levels. So I wouldn't say this is a perfect time for long-term traders to hop on either buy or sell trades on pound yen, and this is clearly because we've just had this impulsive move to the upside, that reaction from here to the upside, and then we've also had, and we're also seeing this consolidation or this retracement. We're not seeing any breaks above this one, which is also what you should look out for. Have these two levels mapped out, so we can get a consolidation from here and a breakout, or we could see the market just break out of any of these levels. So if we get a breakout to the downside and a break below this minor key level here, as we've identified, 160.5, then you would see the Japanese yen market head downwards to make another retest at this significant support trend line. And that's what you want to look out for. That's what you want to capitalize on. This breakout to the downside or a breakout of the upside and above this key level. And then we can trade the pound yen to the upside as well. But for now, not seeing any clear signs. So what I'm seeing is a pullback or a rest on the pound yen after this impulsive move. So I'm looking to trade the breakout of this consolidation. I'm just going to go over to the lower time frames. Let's see what we have there. So still a bounce. We're still seeing the market bounce off at, I think this is the third time it's bouncing off at this key level, this minor key level as we have here, 161.6. We've seen a bounce. We bounced here, bounced again. You know, it's finding difficult to break above this point, and now it has started to push back downwards. I remember from here, it was also difficult for the pound yen market to break below this point as well. This has served as a minor support level. We can also trace it back to this point as well. So still neutral. Obviously you want to pay attention to how the market reacts to these two zones. If you get a nice break below or above, then you want to trade in that direction of the break. So that's what you want to look out for on the pound yen market. Okay, someone is asking, please check XAUUSD. So I believe you're asking me to check on gold. The abbreviation for gold is XAUUSD. All right. So let's look at gold. I'm gonna go to the 4-hour time frame. Okay, so in our last live trading session, I think gold was at this point, and we looked at the possibilities of a continuous move to the upside or a break below this minor key level to get down here and continue to move to the upside, bounce off at the moving average and continue to move to the upside. That's also going to be a bounce at this minor key level as well, right? But gold bounced off at this one, which we identified from last week. Let me just extend it a bit, because now that also served as a level where gold could bounce off from again to the upside. But I'll take this off as well. Let's take this off. Okay, so we had that nice bounce to the upside, and gold went ahead to fill this week. So there's something called the week fill strategy, and what it basically means is that when you see the market create long weeks like this can be identified as unfilled orders that the market would go back to fill up, in most cases up to 50% of the week. In some cases it fills up 100% of that week, right? So we have, so I'm just using this to identify the week I'm talking about, and obviously we're seeing that the market's filled up over 50% of this week. But this is mostly a long-term, a higher time frame kind of strategy. Right? But you can also identify these longer weeks on the lower time frames as well. So the gold market moved above to fill up this. What I'm also going to do would be to identify or to connect these lows. Using the trend line tool, and we're seeing that whenever the market got to this point, we saw a nice bounce. The gold market is currently trading at 170 to 175 levels, which is where the market saw a significant pushback and reactions to in the past. Gold is heading higher. Gold is still bullish for now. I still think it's short term, except we get another break above here, and then know that we're headed to 2050 levels, and this level is taken from the daily time frame, which is the highest point gold got to in like 2 years. So let me just go back so we can show you guys. Okay, 1 year actually. So we can see 2050, which is this area where gold was at in March 2022, and obviously see that the market is pushing upwards. If you get another break above this higher high, the most recent higher high created on gold, then the market is headed to make a retest. And if you remember what I said about the weak fill strategy, so you can see the market go back to fill up those orders as well. So gold is bullish, like I said, short term until we get a break above here. Go back to the lower time frames. I think I was going to go to 4 first. And then we're seeing the break above this level that I identified as a minor key level because of the amount of retest that gold has made on this level. So if we can get gold to close bullish above it, the next candlestick, still give us bullish signs, then it's we can go to the lower time frames, which I'm going to do now, to identify possible areas where you can hop on buy trades on gold. But remember, guys, we want this candlestick to close bullish. I think it's just 8 minutes till the candle close, but you can always identify the momentum of a candlestick after it has closed, right? So close bullish. If we get the next one to open bullish as well, then we can identify. I'll go to the lower time frames right now to identify areas where you can hop on buy trades on gold, right? The reason why we want this candlestick to close bullish and we want the next one to also show bullish signs is so that we don't get a candlestick that breaks out and then we get bearish momentum kicking like it did here and push us back to the downside, right? And that's why most times we get to see people say, I was in the trade went against me and continued to move in my direction. You don't want to be caught up in the middle of that. So let me just go to the lower time frames. Let's identify these areas where we can buy gold, because we're still bullish on gold at the moment, even though, like I said, it's quite temporary until we get a break above here. So we're seeing why this is a key level, right? We're seeing how many times the market made some noise around here, retest, made another noise here, consolidated a bit. We're seeing this break above the 200 period moving average. We want that break to be sustained, or we want this candlestick, on the 4-hour time frame to close bullish and the next one open bullish, and we can hop on the trade. And let's see. And then we can use this minor key level as our first target. I'm trying to see if there's another swing. Yeah, none. We can use this as our first target and this as our potential second target as well. So that's what you want to look out for on gold. Sustained bullish momentum. That's what you want to look out for. Or you can be patient enough for gold to make a retracement to the downside around this zones. You know, if gold gets back down here, then this can be an area where you can look for buy opportunities to trade gold to the upside, right? And the reason for this is because we've had a huge move to the upside, and usually when huge moves happen like this, you get to see the market slow down a bit before it continues to move to its original direction, right? So this can be an area where you can be patient enough to hop on buy trades on gold here. Here as well. But if you see the gold market break below this trend line, then, you know, we're going to start to look for sell opportunities. So that's what you want to look out for if you're long on gold. Gold is still bullish. Obviously, we're seeing how the market is also going to react to these levels, right? These are areas where the market has made some noise. It's going to react there. Then a breakout would lead gold to the upside, and that's what we need to pay attention to. Okay, I'm just going to go over to the comments and see if you guys have any questions so that I can answer them. So if you have questions that you haven't typed, you can go ahead and type them now. You know, probably questions concerning the analysis or your personal questions that you have concerning trading, your own pairs. You can still ask these questions as well. Matthew is asking, please, Ambrose, when is the right time to buy a particular currency? So, like I said, you need to have a framework, right? The framework gives you, but the framework is what tells you when you should buy or when you should sell currency, right? Or a currency pair, because you're not trading currencies in isolation. So it tells you when you should buy, you know, currency pairs or indices, whatever instrument it is you're trading. Your framework just gives you an overall idea of what's going on in the market, the triggers you should look for before you execute that trade, and your exit points from that trade as well. So if you have a framework that includes market structure, includes your key levels, then you're already understanding what the market is saying and where you should look out for, or potential areas you should look out for buy or sell opportunities. That is your indication. So I hope I answered the question correctly. Or I hope you understand the question. You can let me know in the comments. Saying I have a question, you can type a question in the comments now. You have one. Let's Makers talking about NASDAQ. Okay, let's just quickly look at NASDAQ. Okay, let's go to the 4-hour time frame. Just gonna take this off. So we've had these key levels mapped out, you know, over time in our live trading sessions on NASDAQ, and we're seeing how price has respected these key levels. We're also seeing what I showed you guys about the weak fill strategy, where price went back up to fill, you know, up to 50% of this week, you know, just fill up these orders before it started to head back downwards. Potential direction of Nasdaq is here, because we're seeing how it has reacted to this level, can break above it, and the market is starting to push back down. So, the middle of this range is not really an amazing time to hop on buy or sell on Nasdaq, because it's trading to the downside. And if you want to trade the bounce of this minor key level, you can just be patient for it to get down to this point and just, you know, reject and start to push back up. And then you can use that and identify buy opportunities on Nasdaq. If you want to hop on sell trades, let's go to the lower time frame, because we have a little amount of points from here to here, right? So if you want to hop on sell trades on a higher time frame, then you know what you'll be getting is going to be like a one-to-one risk to reward, right? Because your stop loss is going to be somewhere above this highest point of this candlestick. Your first target is going to be here, so it's obviously going to be a one-to-one, as you can see. 1% risk, 1% reward. But if we go to the lower time frame, let's see. You can identify areas where you can potentially set your stop loss, as you can see here. So we've had this consolidation and the breakout. We're seeing if the next candlestick shows bearish momentum, so Nasdaq is going to trade to the downside for a short time. I think obviously to this area 12410.7 or this zone. So I'm just going to identify that. Let me just identify that. Yeah, I'm just going to draw it from here. And your stop loss can just be above this the highest point of this breakout candlestick. The risk to reward is now 1.7, just almost 1.2, but you can use your risk appetite and your trading plan to determine how much you want to risk on this trade and capitalize on it. But obviously, you want to pay attention to what goes on here, right? We're seeing that the follow-up candlestick or the breakout candlestick of this push to the upside is bearish. We have another one that is bearish. We want to see how this candlestick reacts. If you're seeing another bearish momentum, then obviously we trade Nasdaq to the downside. So Blessing Chukwemeka, let me know if you understand the analysis. Matthew's asking, please, as a beginner, how do I know if a particular currency will trend more in a trade period? So trends are made up of higher highs and higher lows, or lower highs and lower lows, depending on the trend. So if you have an uptrend is going to be made up of, okay, let me just use this other two so it's more visible, or this one. So an uptrend is going to be made up of a higher high, a higher low, another higher high, and higher low. At least two higher highs and higher lows can give you an indication of an uptrend. A downtrend, on the other hand, is going to be made up of lower highs and lower lows, right? Something like this. Just quickly identify that. All right, so when you see two or more higher highs and higher lows in the market, then you can call that an uptrend, right? So you can use that. You can identify potential lows of this uptrend to look for buy opportunities and continue with the trend. Another thing you can look out for is what we call chart patterns, where we have continuation chart patterns, because the question is obviously about trends and how to trade more. So we're looking at continuation chart patterns, not reversal. And we can have chart patterns like the rectangle patterns, or we can have the flag pattern, which is made up of the pull and a consolidation, right? So when you see this form, what you want to trade is a breakout of this level, which is the resistance of that consolidation. A breakout of the upside, then you can call this a flag pattern, the consolidation, and then you're looking straight out to trade the breakout of the resistance and trade the market to the upside. So we're saying that this continues from the initial direction. We have other continuation chart patterns like the rectangle chart patterns, the triangle chart patterns rather, and also pennants. So these are some of the things that can help you know when a particular pair is going to, you know, trade or trend more in its initial direction. I understand. Thank you. I've marked it up already. I needed to be sure. All right. It's been an amazing live trading session with you guys. Remember that you can get 100% bonus when you use the promo code Ambrose E100. It's Ambrose and E again, and then 100 capital letter. You can type in this promo code when you manually want to make a deposit, or you can scan the promo code to apply this. You can scan the QR code rather to apply this promo code on your deposit, and you get 100% bonus to your deposit for more profitable trading. The promo code is valid until 31st May 2023. If you have any extra questions that you'd like me to answer, you can go ahead and type it in the comments. I would answer it in the next live trading session. Thank you for participating.